So, if you've been thinking about buying your first rental or investment property, you're in the right place. I'm a property investor, and my partner and we've managed to acquire 3 properties in 2 years, and I'm here to show you how we've done it. I'll also be mentioning some books that can also help you on your journey to becoming a property investor. So, step one, start with research and education. Yes, I know it sounds boring, but honestly, I think it's really important for you to be able to educate yourself on things like financing, understanding the market, for you to be able to really delve into this in the right way. So, if you're looking for a book to help you really grasp the basics, one of the books that have been said to be a game changer is Rich Dad Poor Dad by Robert Kiyosaki. So, in this book, Kiyosaki talks about the importance of acquiring rental property and how not just cash flow, but also appreciation is key to wealth building. Step two, before you start looking at properties, have a clear investment goal. So really think about why are you even buying this property? Why are you getting into property? Depending on your investment goal, it would actually determine what strategy you're going to use. So for example, if you're after long-term rental income, you'll need to prioritize areas that are more stable. So think schools, somewhere close to transport or large employers. If you're aiming for appreciation, then you might want to think about up and coming areas and where there's large development happening. Step three, next, you need to decide what type of investor do you want to be. Do you want to focus on single lets, or do you want to focus on multi-family units or HMOs or even commercial properties? There's so many options. In the UK, historically, single lets have been the go-to, but lately, a lot more people are getting into things like HMOs or even commercial real estate. Globally, of course, there's flipping as there is in the UK as well. But these are some of the things that you'd like to think about before you get into looking at any properties. Think about what your investment strategy is. A great read on choosing the right strategy is The Millionaire Real Estate Investor. Anyone can do it. Not everyone will you? That's the opening quote by Gary Keeler. So this book, it dives into different types of real estate investment strategies and helps you align with the one that fits your financial goals. Oh yes, so one more tip here. So if you're thinking about owning multiple properties in the future, so if you think actually you know that this is something that you want to do and it's not just one property, consider opening a limited company because it helps you separate your personal finances from your investment and can offer liability protection. But we can talk about that in a separate video. So step four, get your finances in order. So this is where things can get a little bit tricky for first time investors. And that's okay. One of the things you need to make sure that you have in order is your credit score, for example, because that is something that will be looked into when you go through the application. And it also means you need to get on board with understanding buy-to-let mortgages as well. I think that's also for a separate video to go into the detail of it, but at least you have it down to note it as something you need to start looking into. Another book to help you understand this is the book on rental property investing by Brandon Turner. He breaks down mortgages, leveraging, and how to ensure you get a good return on your investment. And don't forget, it's not just about getting the loan, it's also about understanding things like getting your insurances in place when the time's right, understanding agency fees as well, maintenance fees, but we'll get into that a bit later in the video. So step five, start looking for your first property. So this is the exciting part. So when you start looking for your first property, you can look on the common websites, so in the UK at least, Rightmove or Zoopla, for example. And if you're anywhere else, you can just really think about your country's local property portals, or you can think about engaging an estate agent. Now, with the properties, when it comes to looking at them, you want to focus on the numbers because I imagine that's why you got into this, is to make some cash. And so one thing that I made sure when we were looking for properties was whatever property it was, we wanted to ensure we at least at the time got a return of 7%. And I'll explain how we get to that shortly. But essentially, you want to make sure that the rent that you're receiving is covering your mortgage cost. So that's essentially what you call positive cash flow, and that's a key rule of. And also, there were 2 critical metrics that I had to make sure that I understood before agreeing to sign on any dotted line. And that was rental yield and cash flow. Your rental yield is essentially the return on investment based on the income the property generates. You calculate this by dividing the annual rental income by the property's price and multiplying it by 100 to get a percentage. So here's the example. So say your annual rental income is 7,200 and the price of the property is £100,000. So you would say 7,200 divided by £100,000 times 100 equals 7.2%. So another thing to think about when looking at your property is location. Location, location, location. I can't stress how important this is. So even the best property in a bad location will struggle to make a good return. So what makes a location good? You want to think about areas that people are really looking to rent in. So this can be things like around schools, family-friendly areas, supermarkets, train station, areas that are in high demand essentially. And also don't forget to think about looking at future developments happening in that area, because these can drive the value of the property up, especially if you're in it for the long haul. So one book that can help you evaluate whether a property is a good investment is Real Estate Investing for Dummies by Eric Tyson and Robert S. Griswold. It's packed with practical tips for analyzing deals. So step 6, close the deal and time to manage this property that you've now got. So make sure once you have your offer accepted that you have a good solicitor in your hand. I had some experiences, but we won't get into that today. And another thing you want to think about early on is if you're willing to manage the property yourself or not. So whether you decide to manage it yourself or getting a property management company, just remember that having a property as a landlord means maintaining it and keeping your tenants happy as well. And also, of course, the costings. If you're hiring a property management company, then this will have an impact on your annual returns as well, because you need to factor that into your cost. Another thing you need to think about is repairs. You need to be able to keep some money aside in the event that there's any repairs due to the property as well, because you don't want to be unprepared for any unforeseen events that may happen. Maintenance is key, as my mum always says. And a good rule of thumb is to set aside 1 to 2% of the property's value a year for these sorts of repairs that may occur. And if it doesn't happen, at least you manage to save some money. So I think it's a win-win. So just as an add-on, so scaling your portfolio. So now once you've got your first property, you may be thinking about, how do I do this again? A book you can think about reading is The ABCs of Real Estate Investing by Ken McElroy. It talks about leveraging and being able to use your equity and reinvest in your profits to essentially do the process again and really learn and grow as an investor. So it's a lot to think about, from knowing what areas to buy to thinking about when you actually get the property to managing tenants, knowing about your returning investments, thinking about builders insurance, landlord's insurance. It's a lot to take in. Educate yourself and actually take action, because with action comes learning. For example, right now, my partner and I, we are currently in the middle of a renovation and we're still learning things today, but we'll go into that into another video. And let me know in the comments, what's one of the biggest challenges that you may be facing as a new property investor? And maybe we can help. Love to hear from you. Until next time, thanks for watching.